Good day, traders. Can you hear me all right? Can you see my screen? Thanks a ton for your responses. On behalf of NP Financials and Go Markets, I welcome you all to this session of the webinar. It's an important concept which I'll be discussing today. I call it market mapping. I thank you all for taking time out from your otherwise busy timeline and for attending to this session. I'm here to share my experience in market mapping so that you can understand and take the steps required to utilize it in your day-to-day trading to become a professional trader. First thing first, let's get started with the general advice risk warning. NP Financials Pty Ltd advises all service recipients of the following. This information is provided only on a general advice basis and does not take into account your objectives, financial situation and needs. This webinar is only educational in nature. Let me give you some more time to go through the rest of the slide. Alright, now that you have gone through it, let's get started. This discussion will be approximately for 45 minutes. You may ask your questions anytime or at the end of each slide, or park your questions till the fact end of the discussion. Please raise your hand if you do not understand what I said. I'll be more than happy to explain it further. Please let me know if I speak too fast or too slow, or if you miss something which you want me to repeat. Please do not choose to suffer in silence. Today I am going to cover I'll define the market mapping for you. I'll start with that, the definition of market mapping, how you can also take advantage of my understanding of the definition so that you can also define the market after this webinar. Then I'll discuss why market mapping is required, why you need to do so, why it is so important to map the market so that it guides you, like we always use a navigator or Google map to go from one place to another. Same way, this map will actually guide you to scan through the market. Next, I'll discuss ways of mapping any market. What are the ways? 1, 2, 3. What are the leading ways? What are the lagging ways? And so on and so forth. Next will be the discussion on how to identify the bounce trade ideas from the market maps which you just learned and practiced and mastered. Similarly, you can also have breakout trade ideas extremely well done from the market mapping. I will show you examples. I'll also talk about identification of take profit targets or closing the trade or book profit, whatever, or exit, whatever you may call it, from market mapping itself. Because as you know, entering a trade, anyone can enter any trade. Putting a stop loss also according to the plan is easy, but the challenge which I have seen through thousands of traders is where to get out to maximize profit, because trading is all about how to cut your losses, and how to maximize your profit. I'll also talk about the advantages, disadvantages, and pros and cons of the market mapping, when to do it, when not to do it, how to read it, and what not to read it. I'll also talk about all put together what I discussed at the end of this webinar, and then I'll reveal the competition details. Okay, I always start with audience participation. Let me quickly start the ball rolling by posting a few simple questions so that we can get started knowing each other better. We got four. Sorry for that. My mouse is very sensitive. Right. Sure. I'll ask you 4 or 5 questions. You'll just have to answer simple questions. First one: who is trading professionally now? Just be honest to yourself. Professional trader is a trader who actually earns from his trading. Trading is his primary business or only business. Who is trading part-time and working full-time? Most of you probably working 9 to 5 and then trying to know trading as well and learn trading and do trading. That's what our endeavor, Go Markets and NP Financial's endeavor is all about. Who is not ready to trade yet? Nothing wrong in that. It is never too late to get started. This is probably the most important question. Who wants to learn to trade like the professional? All of us. Yeah, all hand goes up. What is stopping you from trading consistently? This you have to write it down, and challenges, and 1, 2, 3, 4, 5. You have to work on your challenges. Go Markets and NP Financials are taking a series of webinars to help you to know your challenges and overcome those challenges by asking questions at support@gomarkets.com.au. We are here to help. Okay, I will start with how to define market mapping. The first point you need to know is price market, which consists of price plots, price prints or plots, and a market gets started from the left hand side to the right hand side. Whether it is a tick chart or a minute chart or a monthly chart, doesn't matter. And what are these price plots? Who plots this price? Human behavior plots the price effect, because we are the market. We means investors, traders in the sense hedge fund managers, mutual fund managers, or individual speculators. We plot this price which actually affect market behavior. We know greed and fear builds human behavior, as we are built with blood and bone and muscle and so on and so forth. Our emotion, our mind, which is actually real, because if you have to define mind, what is mind? Probably I'll ask you to define mind yourself, because mind is real, and I would like to define it as a process of managing your energy and information to take action. So it's a process, and brain is the mechanism. So there are two things. So greed and fear is extremely useful in trading. As they say, be fearful when people are greedy, be greedy when people are fearful. That will define a professional trader pretty well. This greed and fear behavior of humankind was consistent 1000 years back, is consistent now, will be consistent maybe 10,000 years now, will never change. Our amygdala, as I said before, HPA from HPA, hypothalamus pituitary adrenaline axis, they are the constituents of our human body, so that they will never change, never ever. Market mapping can be done taking advantage of this consistency of the behavior of which the constituents are greed and fear. Good that we have it, so that we can trade market and map the market much before. This repetitiveness of the market mapping can be traded consistently. Okay, now the next one is, what are the ways in which you can map the market? I will first write it down, and then I will go one by one and show you the ways through charts and examples. So be patient. First one, any market can be mapped either through leading indicators or lagging indicators. So you have to ask yourself, what is that attracts you most? Is it the technical ability to map the market, or you are an excellent fundamental analyst? Remember, fundamentals actually drives the market in the long term, but technical actually guides the market. It tells you what to do when and what not to do when within that fundamental framework. Your state of mind, as I told you, as I try to define mind, discussed in previous slide, will make or break you as a trader. And you know, perception is everything in the market. When the Japanese Prime Minister Abe said they want to see yen's fair value as 100, it went up from 75, 77 before and after tsunami to 125. That's 5,000 pips movement. Similarly, in Britain's exit from the European Union, sterling was sliding from 171 till it reaches 118. Again, a fall of more than 5,000 pips. So we need to capture these pips. How? If we can capture 60 to 70% of these big moves through our market mapping, through taking advantage of the leading type of market mapping, then it is better for us, isn't it? So let's start with that. So if the leading indicator is giving you 70% of the market moves, lagging indicator will probably give you much less, as I will show you. Okay. Now the next slide is, any market can be mapped through, I told you, the leading and the lagging, and I am now breaking it down. Horizontal demand points or demand zones, or zone of demand, that is leading indicator. Horizontal supply points or zone of supply lines or zone. It is never a point. Of course, you can draw a horizontal line if you are given a point, but generally speaking, there can be crack and snapback, and the line itself show that a zone is better. Or diagonal support lines, which I discussed in my previous webinar through Go Markets. That was through valid trend lines, and we know what is a valid trend line, and we also know the difference between invalid and valid and tentative and confirm trend lines. Similarly, diagonal resistance lines, if we are joining the peaks or the swing highs, that will generate diagonal resistance lines in the monthly or weekly or daily. Channel lines, we can use any channels which are available, like wrap channel or standard deviation channel or error channel, so on and so forth. And last not the least is overbought and oversold conditions. Okay, now how to start this process? As I told you, I will show you, demonstrate technically. So what we are doing here, you remember last webinar, that's why Go Markets and NP Financial is actually running a series of webinars to get, we started with step-by-step approach, then the next one we did was market structure and dynamics, a little bit of professional trader mindset, followed market structure and dynamics, so that was the third webinar. And in the second webinar I told you what is a down bar, what is an up bar, how to define a down bar. Just to recollect your memory, a down bar is actually a bar or a candle, nothing to do with close. Down bar has to be a lower low compared to the previous bar or candle and a lower high compared to the previous candle or bar. So down bar is actually different from a bearish bar. A bearish bar, as you know, when the close is lower than the open, but this is a down bar and a bullish candle. How? Because the low is lower than the previous and the high is also lower than the previous. So once we have understood the U and D, we write down the U and D on top of, if it is down then we'll write on the top with red, if it is up bar we'll write U with blue. That's what I do to give me a bullish sentiment. So combining U and D, as I told you before, when a down bar is preceded by an up bar, the high of the up bar is the peak. That's what is defined here, peak. This is a peak because this is a down bar, this is an up bar, and this high is the peak. Similarly, this is a peak. Similarly, that was a peak. So if we can see that similarly, I told you in my second webinar, this is the fourth in series of Go Markets and NP Financials. A top is defined when up bar is preceded by a down bar or a candle, doesn't matter. So this is a top. So when we see the peaks are coming down with the pressure of the down bars, and the tops are also coming down with the pressure of down bars, so we call a downtrend in the second term. The first term is up U and D, only 2 bars. The second term is P star, P and T, and the third term is P star, T star. So just concentrate on for the time being, the peaks are coming down and the tops are coming down, so it is a downtrend. Pretty simple. Now there is a little bit of difference, as I told you, and just to revise what I told you, there is a difference between a swing low and a top. Top is very specific in nature. That is, a up candle has to be a follow preceded by a down candle. But swing low is not that. Swing low is a low of the 3 candles or bars, the middle one, whose low is lower than the previous one and whose low is lower than the next one. So that some people call ABC or 1, 2, 3. I prefer to call it swing low and top. So I change the top to swing low when the top definition is not actually satisfied. This is not a up bar. So that's why it is not a top. The up bar has to be preceded by a down bar. That's the top. So the beautiful nature of this top coming down and the peaks coming down is actually get hampered here with outside candle and outside candle, then that's it's a swing low. So the purity of the market is actually lost here, and we got our A class double bottom here. From this A class double bottom, when the previous peak I prefer peak, or you can see the swing high, because an outside bar is a swing low as well as a swing high, because this high is higher than the previous one and this high is actually higher than the next one. So this is just swing high, and in candlestick this is actually a piercing, and this is actually engulfing, and this is actually a harami. Right, so we saw a back-to-back harami and a piercing and an engulfing with a double bottom with two swing lows, and the purity of the drops are lost. Then we are reversing the market here. So this is the starting point of writing down or developing a software. If you don't know how to develop, then we are there to help you to write down the codes of this up and down and peaks and drops, or swing low or swing high. So from this market mapping, simple, absolutely simple, you know when this purity of the lower peaks and lower drops is lost with this introduction of outside bars in the form of swing lows and a double bottom, and it has broken the previous swing high, because this is the swing lowest low 145. Previous to this lowest low 145, we got a swing high at around 151 and then a peak of 155. So when this is broken, like this one broke, this one broke means what? This high is higher than this one, and it broke the one and it broke the second one. So from this point we actually say that it is probably going to go up. That means we are bullish in this here. As you can see, more up bar compared to the down bar. As you can see here on the left hand side, more down bar compared to the up bar. Alright, next one. Taking advantage of leading indicator. If you know a little bit about Fibonacci, which I will describe in one of my webinar with Go Markets, is actually price plots, human emotions. As I told you before, people are greedy when price actually start. As I told you, this is from the previous slide, that this is a triple bottom, or it is a queen bottom, 1 2 3 4 5, and after this actually it broke the previous one high, second high and the third high. So from this point onwards we can say that prevailing downtrend, if it was down, is gone. Now we are looking for up. So when we are looking for a uptrend, then we look for the more of up bar, as you can see, and the peaks are going up, as you can see, and the drops are going up, as you can see, as I have marked. So now let's take advantage of our second term time frame PT, or the third term time frame P star T star, to take advantage of this. Now what we'll do, we'll identify the bounce trades. As I pointed out, if you know a little bit about Fibonacci, I have drawn the Fibonacci from this left point to this right. It is always from left to right, and waited for this to be broken, which is 100% of this move is broken. Then price actually plays around 127 first, and then it plays around 168 to 161.8, which is the golden ratio, which I'll explain in our Go Market webinar and the MP Financials webinar on Fibonacci. Then actually struggled to clear the 200 and actually did not, or could not, go up to 261 with a double top formation and so on and so forth. So this way you can actually take trades from here to the upside, or here to the upside, because this is a drop, you can go along here. This is a drop, you can go long here. This is a drop, you can go long here. This is a swing low, and you can go long from here. So this way you can actually take bounce trades if you have marked the market. Why we have how we have mapped the market? We have just taken a simple Fibonacci, and the ratios, correct ratios of Fibonacci extensions are 127.2, 161.8, 200, 261.8, because 261.8 is derived from this golden ratio by squaring it. Okay, next one. Another leading indicator for market mapping is a pivot point. So these the longer ones, as you can see. This is one monthly pivots from July to the 1st July to 31st, and then second one is from 1st August to 31st August, so on and so forth. And on top of that, I have plotted the weekly. So this is a wonderful way to map the market, because the pivots comes, the monthly pivot comes on the first day of the month, and weekly pivot comes on the first day of the week. So it will be, you'll be delighted to map the market this way, and do a little bit of not little lot of back testing on what happens to price when the weekly pivot stays below the market pivot, and what happens to the price when the weekly pivot stays above the market pivot. Okay, so let's see. Interpretation of leading indicator, as I told you, these are actually weekly. Resistance 3 to 1, pivot, say support 1 2 3, and these are monthly. Support 1 2 3 and resistance 1 2 3. Taking advantage of leading indicator. Now we saw how to take advantage of those leading indicators by combining the Fibonacci concept as well as pivot. So here market price actually bounced from the previous pivot line and then got resistance in the resistance 1. Here price did a queen top at the resistance 1. At this point price did a double bottom, not exactly, but a higher low at this point of support 1, and in this one price got a resistance in R3. So pivots are actually very leading indicators, extremely well established, hundreds of years to take advantage of market mapping. Now let's show you this. Here I am not using a pivot or Fibonacci. What we have done here, here I am discussing your diagonals resistance line, as I have done, or the horizontal support lines. So the horizontal support lines are this one, which are horizontal, like this blue here, and like this one 150 to 35. These can be quarterly lines or the yearly lines. This is a quarterly line, and the bounce, as you can see, this is a monthly line, and which has drawn probably from this side. Always draw these horizontal demand lines or supply lines from the previous left hand side, and see when market approaches there what is happening. Now as you can see in ASX, today morning I observed at 5965 I had a monthly resistance, and ASX, actually the Australian Stock Exchange, or 200 ASX 200 cash, which is the index, actually getting resistance at 5965. So this way you can actually take advantage of the lines which are drawn much before and take advantage of future movements. So this is a very good way of mapping a market. Now breakout trades for market mapping. Market is price plots are like water, and they will probably go to the way in which there is least resistance. So at this point, when the horizontal line is broken and it is supported by the diagonal lines 1 2, and from this point to that point it was actually free flow. There was no resistance. From this point to this point there was no resistance, and all this resistance, so 94.99 for Japanese yen before, 85, all actually came from the left hand side, because no one knows the right hand side. So this is extremely important to draw these lines much before you can take advantage of. Now the effect of lagging indicator, as I told you, the lagging indicators can be moving average or a reborn of moving average, like I have shown here. This is a reborn of moving average. They are quite good when only when market is trending, not ranging. If it is ranging, they are horrible, but if market is trending, they can be actually extremely good. So how to know whether the market is trending? As I told you, through your up bar, down bar, through peaks and troughs, through P star and T star. Once it is established that it has broken the previous peak and the previous another peak, and this one is actually a crack and snapback, because see the separation of these moving averages, and they are quite angled as well. So but it is very difficult for price to actually break all these support lines which in the form of moving average and go down. So what actually it did, it came through another pivot line or a Fibonacci line which is not shown here, just to make it a little bit clear or simple or good looking. Then this price bounce from here, and then actually when it penetrates all these ribbons, and when the ribbons are like a floated one, so that's too much for the price movement. Then we saw resistance here and so on and so forth. Now the pros and cons of the market mapping. Behavior of the market can be mapped much in advance, as I showed you, through horizontal demand line, horizontal support lines, or diagonal resistance line or diagonal support lines. I also showed you how to do it much in advance through monthly pivots, which comes first day of the month and stays there for 30 days or 31st days, and weekly pivots, which comes on the first hour of the week, Monday, when the market opens. And now it is 11 o'clock Australian Melbourne time or Sydney time, and then they actually stay there till Friday close, which happens in Australia Melbourne time Saturday morning 8 o'clock. So that can be done much in advance. Then the reliability of the market mapping is increased with bigger time frame. The bigger the time frame, how bigger? I think monthly is quite big. If not quarterly or yearly, they are always helpful. But I think market can be extremely well mapped through bigger time frame as in monthly. So as I speak, I drew yesterday. I will show you in Twitter, a share price of Twitter, how I have mapped it much before, and how now a probable mapping is happening in a foreign exchange called sterling Swiss, so Great Britain pound against Swiss franc, which I will show you in a monthly. Both of them I did in a monthly. So let me show you actually, otherwise I'll forget. So let's show you this one here, which if you go to if you become a NP Financials member, then you will get all this, the 4-hour trading, 12-hour trading, 24 hours and asset class evaluations, Forex, commodities, bonds, indices and shares, or the instruction based discussions, basics of trading, commodity trading, Trader Foundation 6 months mentorship program, in which I will discuss the daily strategy of Forex. In this one I'll be discussing the 12-hourly strategy, and in this one I'll be giving away the 4-hourly. Or if you are interested in share trading, you are most welcome. Or even if you want to know the commodity trading, commodity is actually a very hot market now. You can trade anything and everything, including gold, oil, rough rice, wheat, corn, pork belly, and then copper and whatnot, lumber, everything you can trade. That is traded for. We actually, NP Financials actually runs a course for Forex, maybe 6 months or 9 months or 12 months, but commodity is a 6 months course, and share trading is a 6 months course. And then we have instruction based discussion on market mapping and dynamics, mapping of markets, mechanics. Although this is the one a little bit of which I am discussing, otherwise these are all a little bit long term. And trade ideas, what happens? Someone threw me out. Give me 30 seconds please. I'm just logging in so that I can show you. You can actually first you have to register here, through this button, register. Then you can go. I was there on the trade ideas here. So trade ideas, you have to agree to the trading is risky, you can lose money, past results are not necessarily indicative of future results. and these are the trades which are closed, and if you go to the when it was given and what was the long or short and what was the results. If you want to see the results, you have to go to the trade outcome, and the trade outcome section you have to agree the financial terms and condition financial services guide and all these things. So if you agree, we register, and then these are the outcomes. So the gold, we got 155 pips in our last trade. Euro we lost 33, in sterling we lost 45, but in euro we gained 113 pips. So standard lot, this is 1130 dollars. Yen we gained 160 pips, and sterling a massive profit of 500, and with the standard lot it is $5,000. So you can see how the losses are minimum but the profits are actually maximized. That's what we are discussing now. And in the traders breakout room, I always post what we do from time. Like I posted the video on this one here, and the videos are here. But today what I was discussing was the structure, market structure, which is the hidden of this Twitter. Twitter is very interesting stage now. This is in shares. As per the monthly chart of Twitter, this one, price has printed an inverse head and shoulder. Price has printed or plotted. I always use this term. The head can be observed as the top. You know what is a top, and February 2016. Right shoulder here, left shoulder there, the neckline here, and the price objective there. Similarly, if we go to the asset class section on the Forex, and in Forex section you will be seeing this same thing, what happened to the euro after the A class double top and a head and shoulder. So this is the head, this is the shoulder, this is the neckline, and we got a retest, and price came down to 158. Yeah, so this is a wonderful way to map the market. Do not force a market map when it is not printed by the price. So price has to print or plot. Always remember the context while mapping any market. Yeah, always remember the context. So whether we are in a downtrend and we are getting a double top, or sorry, double bottom, or we are in an uptrend and getting a head and shoulder, so on and so forth. Keep a journal record of market maps, past history with success percentage to understand its success and failure rate. So all put together, professionals plan hours together in mapping a market, as I showed you before placing a trade. But amateurs actually do not do that and jumps into trade without any plan. Market mapping is very useful to identify and interpret its original directional moves. Market mapping can be extremely useful for profit target identification. With the help of market mapping, it is possible to identify the sweet spots of reversals or continuation of market moves, as I showed you in my Twitter example, in my Euro U example, in my A class double bottom example, and so on and so forth. And I also showed you back to back piercing, bullish piercing, and bullish harami, and bullish engulfing, if you remember in one of your previous slides. Okay, now it is special, very special offer only to Go Market clients. So we'll be offering NP Financials, will be offering you basics, either basics of trading or one-on-one coaching, either through Skype or Google Hangouts or telephone. Trader Foundation course in-house or remote. 6 months mentorship program in which I'll be discussing not only the Traders Foundation, which is for 3 months, but also the daily strategy for the Forex. For that, because it's a minimum 6 months duration, you must take advantage of. to actually learn the language of the market plots, because it is a language, as I told you before as well. And this challenge here of this language is the other speaker, that is the market, Mr. Market, let's call it. It cannot speak, so Mr. Market cannot speak, but it plots. So we need to understand in the graphical representation of those plots. So if you have done engineering or any kind of graphics, you will probably understand and appreciate the fact of the horizontal demand and supply lines, how market can be guided through our knowledge, which I tried my best in last 40 minutes to share with you. In advanced trading progression, along with the 3 months trader foundation and the daily strategy, we'll be giving you the 12 hourly strategy, in which the close of the foreign exchange now, for example Aussie Euro, happens 12 hourly cold close at 11 o'clock in the morning AM and 11 o'clock in the afternoon, in the evening, high or night 11 PM Melbourne time. Professional trader development, which includes all of the three: trader foundation, 6 months mentorship, and advanced trading progression, plus 4 hourly. So if you are getting more time now, many of our students, we call it students, not clients, because we care their educations, financial education. So in professional trader development, which is the last 3 months of the 12 months, or the last module, is actually a 4 hourly trading strategy. Will also help you if you are interested in custom coding or market scanning, or you want to develop your own trading system. So for that, what you have to do, actually you have to go to www.npfinancials.com.au. so this is the one in which you have to go to, NP Financials. So this one here, NP Financials. Well, as I told you, we care about your financial education. So what you can do, you can either go through, because trading is a very active process, really speaking. You are invited to register to one of our trading classes, or send us a message through this. We are online here, Let's Talk. You can do that, or give us a call. This is the number 95667275, and this is the email address at the top. We are here to help you in your forex or commodities or shares or bonds or indices. You can read through what the customers are saying here, and you can also download and make easy book. Most importantly, you can see the samples of our recent trade setups, like we posted on the date wise here. 29th we posted power of pyramiding, which captures 9,380 pips, and you can scroll through this one. On 27th we did for the Euro USD, reaching our head and shoulder, which I showed you, 260 pips. And this one here on 23rd of October, Bitcoin, our system captured 1,723 pips, so on and so forth. So you can know that, and this you know a little bit about us and our trading principles. And if you go to the services, what I showed you, you will be getting special benefits as a Go Market clients, and also in the trading section. So services sections I showed you, trading sections are this one: commodity trading, share trading, market structure, monthly trading session, mapping of the markets, which I'm discussing a little bit now, market dynamics and mechanics. This is extremely important: demand supply trading, or a bar by bar trading, with our strategy. You can take advantage of our client arena as well. So that is probably I'll be discussing now. Or you can go to our blog section and see and what I have written. This continuously every week we have been posting our blogs, and you have to give maybe 10 seconds for the other new blogs to come, and so on and so forth. Yeah. and this is you will get a special discount on all this, and you will also get a special discount again for Go Market clients. You'll get a humongous privilege discounts when you enroll any or a combination of our services in our trading section, as I told you. Now the competition. Please provide your understanding in writing and interpretation of how you can start your trading through our market mapping in details. The winner will get 30 minutes mentoring session with me, which is valued around $225. Please submit your entry at support@gomarkets.com.au, and let us get stay connected. My name is Partha Banerjee, and this is the fourth webinar in this series. So I'll be probably taking another 3 or 4 before this end of year. Number is 0395667275, and then it is partha@npfinancials.com.au, and you can click on this in npfinancials.com.au or services section. A very big thank you and happy trading the market maps. Thank you very much.